Hello traders and welcome back to my YouTube channel IPDATrader. Now in today's video we're going to be going over a trade that a student in my private mentorship actually took this morning on GJ. Once again, I didn't take the trade, but since he actually is in the mentorship and understands the ideas and concepts and the way we actually view and trade the markets, he can have his own ideas, and he decided to share that with the community. So I asked him privately for a little bit more information so that I can share that with the YouTube audience. I'm not going to be sharing everything because there is mentorship material, but I'm going to be sort of walking you through the trade so that you can have an idea of what a student is actually learning and doing within the mentorship. So if that sounds like something you want to sort of watch or learn today, make sure you stick through the entire video because every piece of information is actually valuable and you want to be sort of getting as much information and value that you can potentially then implement into your trading style. So with all that being said, we're going to be jumping right back into the pictures of the trade and we're going to be breaking it down. So traders, here we are once again, and we're going to get started breaking this trade down. As we said, this is GJ on the 4-hour time frame, I believe, as you can see it right over here. And there's a couple of things that are occurring, right? First things first, we can see that structure is being tracked at all times, right? Whether that be the external structure over here, right, as I always teach, or the most sort of internal structure developing over here. Both are being tracked because it's very important for you to understand what structurally is currently doing, because that is absolutely correlated to the order flow delivery, right? Once again, we can also see that trendline liquidity over here was taken as we moved up. We can also see that the order flow is bearish, and we can potentially have multiple points of interest where we can expect certain things to occur at, right? So that is pretty much all there is to this information, right? I would add that we did have some sort of trendline liquidity building over here that got taken out with the shift in order flow, right? So we understand that so far this is GJ. We had an impulse up. We're now sort of retracing back down. And as we're doing that, structure is delivering as such. Right, so we're going to be moving on into the next picture right over here. Let's see what we have. What do we see? Well, we can see, and let me get quickly rid of all that stuff, that structure is being tracked, right? We're now zooming into a little bit of a lower time frame. This is a 45-minute time frame, and we're now looking at the most recent price action over here, right? We can see that we have a break over here, which means that this is a lower high over here, right? And as such, it actually mitigated a previous block, which means that we have a last point of true mitigation. This is where orders were lastly introduced in regards to smart money institutions, whatever you want to call them. So we know that this area over here is going to be of interest potentially, right? So we denote that. We then sort of grab a rectangle and say this is a point of interest. And we can also see that liquidity is being tracked, right? Where is currently liquidity sitting? We can see that we have that double bottom, triple bottom, whatever support, whatever retail wants to call it. So we understand that we do have some liquidity within this area over here. So points of interest over here, because if we look at the microstructure, we can see that we have something like this, right? So a potential expectation could be as such, right? Moving into lower prices over here. So let me get quickly rid of all that. We understand that. We see that this is an important area for potential trades. However, we're not blindly going to be executing over there. We want to have more information and confluence as price is mitigating this block over here. Just as an example, if I want to sell over here, I want to make sure that the liquidity that is resting within this area is still available as I'm looking to trade this lower, because then I will have a reason on why price may actually head lower and target that liquidity. So let's get rid of the drawings once again, and let's continue with the next picture. So this is sort of the start of the trading day. Once again, we're now zooming into a little bit of a lower time frame, which is actually what you should be doing as you're sort of analyzing the pair. You want to be flicking through time frames and potentially moving into the lower ones as you understand the bigger picture. Right, so we look over here. We're now in the Sydney session. The Sydney session just finished. So we're now in the True Asian session, which is something that is actually available in the YouTube channel for free within the Forex Daily Cycle video. So we can see that the Sydney high is being taken out right at this point over here, which is essentially what you want, right? Because think about this logically. What is happening over here? Well, we have equal low liquidity sitting at this area, and now we've added a Sydney low liquidity into that. So if I want to see bearish price action and sort of bearish mitigations, I want the Sydney high to get taken out first into an area of interest that then can provide and sort of give me the mitigations lower that I'm looking for, right? That is what I believe this trader is actually seeing over here, right? Sydney high taken. We're now waiting for those points of interest. We're not FOMOing into trades. We're patiently waiting because we understand our edge, and we understand that if we want to make a high probability decision, we want to be waiting for those discounted areas and sort of high confident confluence and probability areas, right? Once again, we do have some sort of trendline liquidity that was taken out as we took the Sydney high out, so we have a little bit of a more confidence and confirmation over there, right? Let's actually continue flicking through the pictures. Let's go over here, and we can see now that, hey, so you can see he's not FOMOing into the trade as price starts approaching the point of interest, because he understands where we are in regards to the session and what is actually occurring, right? We can see that we're now hitting the point of interest. We're moving into a time window where a high may actually print. So he is also aware of that, and he's aware that he may want to be targeting down there because here is where liquidity is sitting. We can see that we're also building trendline liquidity over here. So we have even more reasons to believe that, right? Once again, we did had equal highs created right below the point of interest, which means that we're no longer taking only Sydney high out, but Sydney high into equal highs into the mitigation right at a particular time in the day, which I'm not going to be discussing for now, right? So, but we can see how we're building a story and a narrative on what is actually happening, because that is what you actually want to be doing, right? You're going to learn some tools, and it's your job to implement those in the way that fits you better so that you can have your own system, because at the end of the day, there is no two trades that actually trade the exact same way. You need to have the information, and then you need to decide what sort of can work for you and fits you as a trader. So let's continue watching and actually seeing what is developing, right? He understands now that we're mitigating the block, we're getting a liquid reaction, we have a certain fib levels that we may want to be paying attention to, and we're sort of shifting momentum back bearish, right? So let's actually see, remove the stuff once again and continue into the next picture, which once again, I'm actually avoiding certain stuff because he actually broke everything down in very much lots of details, and I am not going to be exposing that into the YouTube video, so I'm skipping certain things and ideas, right? But you're getting the picture. He's at those he's at that point of interest that is sitting above liquidity. He understands where he's targeting, and he's applying what I actually told you within the risk management video over here, right? You want to have certain levels where you're actually going to be doing things to prevent your trade from turning around, from prevent your trade from actually taking you out at stop loss or potentially break even as it is moving in your favor, right? So we understand that we have some nice little protocol over here developing, which confirms that this area actually wants to hold, and that can actually lead into lower prices over here, right? He's also got levels that he has predetermined before even entering the trade, because he understands that the algorithm will always make you close early, close late, sort of do the wrong thing. So he's avoiding that. How is he doing that? Well, he's creating some levels for himself where he wants to do certain things. And this is one way of doing things. And there's multiple at the end of the day. And it is, once again, your job as a trader to identify how you want to manage your money and your positions, right? There's really that simple. Nothing complicated over there. So let's actually continue and see what occurred over here. We zoom out and now we have the bigger picture, right? Within the daily cycle, we can see that we're now looking at a 1 minute time frame over here, sorry, right at the top. And this is what the day presented. This is what he decided to trade. As you see, he actually closed the position out as we took this liquidity because he understands his movements. He knows he just wants to catch a certain pip amount and then get out, because there is no need for him to be expecting price to continue lower and lower forever, rather than maybe just take your piece of the cake and leave and be thankful to the markets, right? That's sort of the approach that you should have instead, right? So we look over here, we see the Asia high build sort of printing at external structure. We see the Sydney high being taken out first. That is your first clue that we want now to maybe target the Sydney low, because both Sydney highs and Sydney lows usually get taken out every single day. Not always, but most of the times you can bet on the idea that both will get taken out. So he waits. Price is now over here. He sees something that he identifies and likes as a confirmation. Then he takes those sell positions, manages it accordingly, right? Reducing risk, mitigating positions, moving to break even, whatever it may be. And where is he targeting? Well, he's targeting liquidity over here in the form of the Sydney low, in the form of trendline liquidity, in the form of equal low liquidity. So as you can see, everything sort of matches up. And this is how you want to be looking at the markets and trading. And don't forget, guys, he has been in the mentorship for pretty much 3 weeks. So imagine what we're capable of doing with the trading methodology that I teach. So that is pretty much going to be it for this video, I believe. Once again, understand that I cannot explain everything in further detail, because that would be pretty unfair for members in the community. So that will actually never happen. But I believe that this can provide you some insight into what is actually occurring over here in regards to the algorithm perspective, right? Because you don't need to trade this way. You can make support lines and resistance lines work. There's nothing wrong with that, as long as you have a plan, as long as you have a risk management system in place for yourself. You can be successful. That is the turning point for everyone. You don't need to be sort of trying to understand every move in the market, but you can also keep it simple, right? So that is completely up to you. I understand that there's people have different ways of trading the markets. No big deal, nothing wrong with that. So with all that being said, that is going to be the end of the video. I appreciate every single one of you actually tuning in, and please leave a like, comment, subscribe. If you actually got some value over here, I would gladly appreciate that, and that would help me with the YouTube algorithm at the same time. So with all that being said, I will see you guys very soon, and I wish every single one of you good and profitable trading.